There's some interesting stuff going on in the gold world. Have you guys caught up with this? Have you been keeping up with the whole Fort Knox audit and all that drama and all that stuff of like how much gold does the US really have and why is London selling so much of their gold? And that's a fun drama conspiracy rabbit hole you can go down. But regardless, I think that there is just this. We know that regardless of whether you entertain that or not, central banks are and have been buying gold aggressively, and it seems like a de-dollarization slow motion event is sort of taking place. Um, you guys know I'm a long-term bull when it comes to gold and silver. Uh, I think that it has plenty of room to continue higher, and people are kind of all over the place on social media saying like, "Oh, it's gotta come back. It's due for a pullback. It's gonna sell off." And you know what? Maybe it does, but that is certainly not something I'm trying to call or time. I would not be surprised if we just continue this momentum right on up into the three handle. If we see a move to 3,000, I would not even be surprised. Now, that is not financial advice. As always, you guys know I'm not here to tell you what to do with your trading account. But for me personally, I like the metals. I still think they have upside, and I have a systematic reason for thinking so. I am and have been bullish on gold and silver. They remain the top setups on the Edge Finder. This has been a very solid call here recently, and I stay with the trade. Gold flipped. I can't remember the exact day. I want to say February 5th was the day that the Edge Finder started pointing more bullishness. And at that time, people were like, what? So the Edge Finder is getting bullish now? Well, look, I mean, it's still going, right? So sometimes it's actually easier to join a train that's moving than to try and jump in front of one and call a reversal. And so, these little intraday dips have been wonderful, for the 4-hour chart traders, the 1-hour traders. These dips may have been really nice opportunities just to continue to play this long side action. Again, we don't know where this thing is going to end. A lot of traders are going to get themselves into trouble trying to call the top on the metals. Again, I literally made a meme for this morning. No way gold keeps going up. Gold looks like this. I mean, it is a scary beast of a chart right now, and this is not a chart I want to short. If you are the brave soul facing up against the dragon, there's a graveyard full of traders surrounding you, right? There's so many people who have tried to call the top on gold, and to try and be the next one. Be my guest, do your thing. Maybe you are the one in 100 traders that gets it right, but that mindset of thinking like, oh, I'm the one who's going to call the top on gold, you are braver than I have humbled myself in the markets enough times to realize, like, when the market is just trending, you don't try to call the top. It's very, very difficult to do when something's moving with a ton of momentum. Similarly, a lot of people are trying to call the top on this stock, Meta. This thing has been a beast, right? Meta's been an absolute monster. A lot of people have been trying to say, oh, Meta's due for a big correction. I'm not saying that it doesn't, it couldn't use a nice healthy pullback. I'm not saying that. But you trying to say, I'm going to call the top, it's going to pull back, is different than saying it's probably due for one, but it doesn't have to. Like, it could. So here's the thing. Like, if I'm looking at Meta or gold or something that's just moving like a beast, right? It could pull back today, but I also could see it pulling back tomorrow, or the day after that, or the day after that. But me saying it's going to pull back today, I've been beaten up by the markets too many times in my life to truly believe I can call where a market is going to top. You know what's crazy? I think realizing that you can't call the market that perfectly is a key cornerstone moment for any profitable trader. Profitable traders don't insist that they can call what the market's going to do next. Fools do that. The market is bigger than any one of us, right? It's difficult to time this stuff. It's difficult to call this move. I'm a metals bull because I have confirmation from the Edge Finder and momentum. I am a trader that trades momentum. Until momentum fades, I don't call the top. Does this make sense? Are we on the same page? Anybody else feeling the same way with metals? Can we just have a humble pie here today together and just say, look, I don't know where the top is. I don't know. I'm not going to, because man, so many traders get themselves into so much trouble trying to short markets that are ripping.
Did you know that we have 100% free trading tools and data available for you on our website, a1trading.com, right now? We have free courses for you to browse. You can also check out things like retail sentiment and free articles from our analyst Frank that include things like edge finder screenshots and trade setups. You can find all of this and so much more for free right now on our website, a1trading.com.
I can't tell you how many times I've seen index traders, probably the worst. This is probably the worst. Is I have had comments in my YouTube channel, guys, for years, 6 years. I started this YouTube channel in 2018. So what has it been? Let's call it 6 years because I started late 2018. 6 years of people saying stock market's going to crash. Stock market's going to crash. This is the top. This is the top. Chanting that this is going to be the moment that the stock market crashes. This thing has been in a secular, strong, upward bull market for several years. Now, you've had 2 years of up market, right? 2022 was more of a bearish market. Lo and behold, it was easier to try and call a bearish continuation after it started to crack than before. If you were calling for a bearish move, you're just making noise, right? Trend following. I'm a big believer when I talk about ideas that I have in the market. Trend following. Think about the word. Think about the expression that we're saying. Trend following. You're not trend leading. You're not saying this is when the trend ends. Trend following for me means I don't take profits just because we've had a move higher. I'm following the trend. If the trend is still up, I'm still in the trade. Now, that's just the technical side. The trend on the fundamental side is what matters. That's the true driver. That's what's going to give follow through, right? You want to talk about fake outs and follow through moves? Follow through usually goes with fundamentals. Strong fundamentals for a story, I would argue, like gold and silver right now, have potential to continue to follow through. They've been following through, but I think they continue to follow through. Meanwhile, traders are going to call the top. They're going to try and call the top over and over and over. And I just think, again, the sooner we accept that we don't know the tops of trends, the better off we are. Does that make sense? Hopefully that resonated with someone out there. I heard it, probably 10 years ago. I was listening to somebody talk about something just like this, and it resonated with me like no other. He said, the second I realized I need to just stop fighting trends and just go with them, trading got a little bit easier. It's not a magic pill. Oh, just follow the trend, you're going to make money. It's not that easy. You still, in my experience, you need to have fundamentals. You need to have reasons for your trade. You need to have risk management, psychology, discipline. Proper position sizing is so critical. There's so much to becoming profitable, but one of the simplest things that you can change, in my experience, that has really, truly helped me is don't fight trends, right? So I'm still long silver. I like gold a lot too. I actually don't even like, this is going to sound like insanity, but you give me a pullback on gold, I'm probably going to try here. I'd also try if we get a bigger discount, but I don't see anywhere better right now than gold. And I am not telling you to do that. You guys know, I always mention this. This is not financial advice. I'm not here to do your homework, is what I like to say. I'm doing my own trading. These are my opinions. For me personally, I don't see anywhere better than gold right now to the upside. And it doesn't mean it can't have a big sell-off, and it's not a perfect, guarantee it's going to keep going higher. But the probabilities for me that we move higher for gold are good. I don't think this move is done. As crazy as that might sound, people are out there everywhere on social media. Gold's got to pull back. Gold's got to pull back. I don't think so. Maybe it does. Maybe I'm wrong. Wouldn't be the first time. But I don't think, my comment section is full of people saying, oh, gold's at the top. Gold looks great. Our indicators here are flashing. They've been bullish, right? If you've been fighting this call, you've been on the wrong side. Gold looks good. Trend is to the upside. Seasonally, the early part of the year is really strong. You want to see that? You want to see why the edge finder is bullish? We can talk about it. It's not even rocket science. Gold is positive most of the time early in the year. If you're ignoring fundamentals and data, it's going to bite you in the butt. Don't ignore this stuff. This is straight up simplicity, like simple things that you can add to your trading to add some insights that really might change things for you. If you found yourself super short gold into the early parts of the year, obviously this is not the only thing we want to look at, but seasonally, even if I was bearish, the edge finder would have told me, no, you don't short early in the year, because the edge finder tracks this data and it goes right into our top setups algorithm. You would not have caught me short gold into the beginning of the year, because seasonally it is a very strong period for gold. So even if a lot of other things here were bearish, this indicator would dock the score by it would add score, right? It would add bullishness to the total score. Again, using data can make or save you a ton of money if you use it appropriately, manage risk, and consider things that are really important. Seasonality is a real thing in markets. That's part of my trading approach. We can actually filter this out and take out neutral readings. This is pretty much my watch list right now. I do also have a short position on Swiss yen. We could take a look at that as well. Let's see what we've got. Swiss yen here. So I have a short position on Swiss yen. It's very slightly in green or in blue, depending on which brokerage you're on. But nice start here for Swiss yen. I would like to see some follow through to the downside here. But Swiss yen continues to be a bearish reading on the edge finder, as most of the yen pairs do. Dollar yen bearish, Swiss yen, Euro yen, Kiwi yen, CAD yen. You know what I also thought was interesting is you've got Russell getting a bearish reading. It's only a -5, which is a bearish reading, but I do like when I see stuff getting more into like the -7s, -8s, -9s, or 7, 8, 9. That's just a little bit stronger of a reading. More things are, if something's getting a +5 or a -5 on the edge finder, it's still a valid setup for me if I can find the right technical entry. But a 5 is very possible to dip back down into neutral, right? Whereas a 7 or an 8 or a 10 has much more room to lose a couple points on something here and still be a bullish reading, right? Check out UJ. Good buy at the moment. Let's take a look at UJ. I don't really like any of the yen crosses for bullish setups. This one looks still like it's got momentum to the downside, but we'll see. I mean, if you are a buyer of dollar yen, right, you do have this level of support. Let's see if that holds, or if we're going to go test down here around 149.50. I personally would not trade dollar yen, just myself, because the swap fee is very expensive if I'm going to short. And it is if you're bullish on yen crosses, dollar yen does pay you out pretty nicely for holding it positive swap. For me, Swiss yen is still the path of least resistance to the downside on yen crosses. I like this trade. So we'll see. But yeah, I mean, yen looks really strong to me. We have this new Japanese economic heat map. Here's the thing with the yen, and I'm glad that it loaded up here properly today. Yesterday, the edge finder was being so slow because of Google's delay or their server, whatever. Unemployment rate came in lower than expected. So that's strong for Japan. Okay, employed people came in better than expected. Strong for Japan. PPI, this is strong for the yen, by the way. Even though this is red, if we're talking about yen for a second, check this out. The Japanese yen saw PPI go up to 4.2 compared to 4. Strong for the yen. Inflation rate came up to 3.6 from 3.2. Strong for the yen. Retail sales numbers came in hot. Strong for the yen. Services PMIs came in hot. Strong for the yen. Manufacturing PMIs missed. Weak for the yen. GDP growth came in much better than expected. Strong for the yen. The yen to me, I'm not telling anyone what they should do, right? This is not financial advice. I like the yen. I think it has upside. I could be wrong, right? That's the thing about markets, is all this can look great for the yen, and yet still could reverse. But for me, the path of least resistance when looking at the Japanese yen is more yen strength.
I'm pretty flat, so the only trade I have right now is the Swiss yen. Similar to Nick's, it's the one that is the most efficient for yen bullishness. All the other pairs have a high swap fee, and that one's a more long term. And I think the yen has some really good long term potential. But as far as the DXY goes, we did see that it broke this 107 level, and I want to see how it holds up. If I'm going to short the euro, I think we can tap this 106 level. We have Trump speaking today. We have some more growth metrics out of the US. And if we get some better growth numbers that come out and inflation continues to stay where it's at, or if it trends upwards, then I do see that the dollar will gain some strength again. But I really want to see how this 107 level holds up. If we go ahead and break above it, then I would probably consider getting into euro shorts, Australian shorts. Let me see. I will show you the euro. This is where I'm at with the euro. We've seen that before. It has reacted out of this 105 zone here that we have. So I want to see if it continues to hold. It's rejecting it initially, but I'm kind of skeptical, if you will, about it. I think that if we hit this 106 level, it'll be a better risk to reward. Dollar Swiss. Dollar Swiss is a good one to me as well. Let's see here. Let me delete this. We reacted initially to this level of support, but again, I'm still skeptical if it's going to hold or not. Like, kind of referencing the dollar. If the dollar rejects that 107 level and flushes down to the 106, then I think I can get a better entry for the Swiss. And a better entry to me would be, right around this 0.8900 level. Euro yen could be a good one to day trade. So when it comes to like these yen pairs, I've done this in the past before. Last year, when the yen initially got some strength, when there was some. Hey James, nice, yeah. When the Bank of Japan intervened, and then whenever they first initially went ahead and hiked their rates, that caused some unwinding in the yen carry trade. And so what I was doing was just day trading the yen very carefully on these pullbacks, because the yen pairs, their pullbacks are pretty nice. They respect levels, and you can get in and out of them. So if you were going to day trade like the euro yen, for the person that went ahead and requested it, I would wait for some pullbacks, and I would also like to wait for the euro to get into a nice level. So let's say the euro goes back to this 105 level and it starts to respect that level, and also the euro yen gets to a nice level that's of support or resistance, then that would be a good contrarian to say, hey, let's go ahead and short this short term. But holding it long term, it could be quite expensive. So I don't know if I would go ahead and do that. And then another thing you can look up to line up is if the yen currency index, if that also lines up with that, then that would be a good day trade. So we reached this level up here, which was a good level. I think we missed it a little bit, and my zones are not defiant, so take that with a grain of salt. But like I said, I think if we reject that 107 level on the dollar index, then we could have another opportunity to go ahead and short the New Zealand dollar at this more attractive level. I think for most of my shorts on like the euro, Australia, New Zealand, I want to wait for better pullbacks. I think we can get them. And with some upcoming news and Trump speaking today, I think that we can get some volatility that can help us get those more attractive entries for sure. My trading style is primarily swing trading, momentum type trading. But when there's moments like this where I'm not really in a big swing position, the COT data was kind of mixed. The momentum has shifted for now, as far as like we've been in a dollar bullishness phase, if you will. So when the momentum shifts or the narrative shifts, then my swing trading doesn't work. You have to wait. And so right now I'm pretty flat. The only one I'm in is like the Swiss yen short. So sometimes I do day trade, but my day trading is off of the backs of a like a news catalyst. So for example, let's say I'll use this New Zealand chart for an example, and I'll go over it pretty briefly here. Let's say we're trending downward on the New Zealand dollar, right? And we get a news catalyst, like for example, non-farm payrolls. And the momentum is to the downside. COT supports it. A lot of things support it. But the non-farm payrolls print goes ahead and spikes the price up. If it spikes up, statistically, there's a good chance that price is going to return to its, origin pre-news price. And so what I like to do is on the lower time frames, wait for the initial spike to go ahead and start retracing backwards. And when that happens, I go ahead and go short and target that pre-price of origin. And then once I'm at that level, I get out, because after that, you don't know what's going to happen. It could continue going downwards or not. But that's what I do for day trades. Now, let's say price is trending downwards, but the new spike pushes it downwards in line with the trend. Then I do not go ahead and take that mean reversion trade.
Good morning, everybody. Happy Tuesday. Welcome back. We're sitting here just off the all-time highs in the SPX. Take a look at equal weight. Hanging on. I'm going to be looking at some positions here. SPX, XSP, NDX, maybe some of the equal weights as well. We're not quite at the highs on equal weight. We go to the NASDAQ. NASDAQ poked. Didn't hold, not yet, but we poked all-time highs again on NASDAQ today. Here's the QQQ right there. Gapped up higher. We are fading. I'm seeing the futures market drop a little bit. Let me go to NASDAQ futures. So just in the last hour or so, we've had pretty much straight down on ES as well as NQ. So if this is going to be leading the way, if we're dropping on futures, I would expect the indexes to be a little bit soft going into how they close today. So gapping higher, again, you're going to celebrate the news. You're going to see it. I wouldn't be surprised if I go to marketwatch.com and it's going to say all-time highs on NASDAQ. But if it closes red today, we'll see if it actually holds that all-time high. That's what happened here on the S&P as well. So this is, I don't think it was at a high. We hit a high on Thursday or Friday last week. So we had an all-time high number one, that is 610.78. And then on Friday last week, 610.99. So that's one high for the year, two highs for the year. Today is right at the same level, but just not quite there to poke out a fresh high. I'm curious what the mainstream news says. Let's go Market Watch. Indexes forfeit early gains after long weekend. Okay, it's at least acknowledging that it's red off the top. Let's go futures market. Futures market is mixed. We're showing Dow futures are down. S&P futures are now flattened out to basically null on the day. NASDAQ futures have gotten into red on the day. Gold at 29.45. All right, we're surging towards that 3,000 handle. Okay, so today's close is going to be important. I said this on Friday, the daily close, the weekly close. We had a holiday with President's Day on Monday, so Tuesday, Wednesday, Thursday, Friday this week is a monthly expiration. I'm as curious as everyone else, like where we're going to be for the end of the week. I did end up taking a couple of early manageable trades. Most of the time, I kind of sell premium on SPX. And I chose a couple of trades in December. We went out about 40 to 50 days. And I'm just saving risk on the trade. I took losses, but rather than taking like a $3.50 loss, I'm taking about a $1.10 loss or a $1.50 loss. So I'm saving myself some reasonable risk there, which I'm comfortable with. And then we'll see where the where prices are going to stack up. As far as implied volatility goes, right now we're looking at Ivy rank of 17.7, which is a little bit higher than last week, not much higher, but we're still in this like low, I'd say like low-ish not like super low, but I'd say low-ish volatility environment right now. And the only thing that's going to get the market excited as far as volatility goes would be a big, nasty sell-off. I don't see any major news this week. I know President Trump is on the calendar for today, if anybody saw that. Tentative between like 4 p.m. and let's say between 4 and 5 p.m. Eastern time. It's just going to be talking through executive orders. So whether that is Tariff 3.0 talk, if that gets the market rattled at all, it's after closing bell. We'll see if that creates any type of drama for this week at all. Other than that, I don't really have any major news outside of some rate decisions. We had rate decision yesterday for RBA. They did end up cutting rates 25 basis points. Currency strength today is reflected by everything pretty tight. New Zealand dollar is a little bit softer. Yesterday it was Japanese yen strength. So my Japanese yen futures position, that's /6J, doing pretty well. My FXY shares doing pretty well. Today, the dollar index catching a little bit of a bid. I still think the dollar finds some support around 106 to 105.50. We'll take a look at gold, silver, oil, things like that. Okay, so if we can't hold and sustain these closes above the highs, then we obviously might give some back and dealing with some of this chop. So, we could have a horizontal range in here that we're dealing with if price falls back into the center. The other one would be just a little bit more of a top there. Or I suppose we could, that's a tough trade. If we went a little bit higher like this, if I connected these recent highs and these recent lows through the election, I'm not saying this market can't find a way to go higher, okay? But given how we faded off the high, if we end up coming back to the mid price, then I still think this market is a lot of indecision that eventually is going to have to break. But this is also getting like higher highs and slightly lower lows, which could drive traders crazy. And, I'm actually okay with that. Trading through that noise and trading through that chop, I'm okay with. Getting a correction that comes back and revisits these kind of post-election lows, that would potentially be a correction of around, almost 6%. So do we get it? Maybe. Do we not? I don't know. There's no crystal ball here, but I'm still bracing for some type of movement back into my 200 moving average. Okay. I posted a video yesterday on TradingView. So if anybody is in the TradingView charts, you can just find my handle on it's just Chris Pulver with no spaces. And I posted a video yesterday. This is also on my YouTube channel and on my respective outlets and whatnot. But just basically said like 2025 market outlook, cautiously bullish, key bar counts. And I did this for SPY as well as the days we've closed above the 200 moving average on the NASDAQ. The Dow has the same type of bar count. So I'm just a little skeptical of how much more bullish we can get without having like a move that eventually comes down. So look, I could acknowledge this market goes higher, but I think we're going to snap back down into some capacity, having some type of volatility expansion that essentially works both ways. Okay, this is interesting right here. 90% of fund managers say that stocks are overvalued. Call me contrarian, but the pain trade would be that, unless fund managers are actively short, just saying it is nothing, If I'm seeing like active managers are currently short, then they're idiots and they'll probably see the market go higher. That's the pain trade. But if it's just a comment, it's just a comment. Dollar index, I still think there's some room to fall into this like 106 to 105.50 area. I am only in, I think New Zealand dollar long is my only position right now. As far as dollar pairs, I closed out of Aussie dollar for a winner. I closed out a dollar CAD for a winner. I closed out a dollar Swiss for a winner. I'm not in dollar Swiss. I'm not in euro dollar. Euro dollar doesn't look like a bad short to me. So playing the euro dollar, I don't mind this right here. So if we went dollar, it's basically the inverse of dollar index, right? If I think dollar index has some 106 to 105.50 support looking for a bounce, if I were to look to short the euro dollar now, I think this going back down to the lows seems reasonable. With a reward to risk that's favorable. So there's a bit more reward here for risk. Okay, so about maybe 1.5 to 1, maybe 2 to 1. And obviously that big discussion, if we get to parity, 1.00 would be obviously even better reward to risk. So as long as we are, and I'll make this, if anybody's trading this, it's like trade small, maybe stack in some sell stop orders. If we break these lows, go to parity 1.00. But as long as we stay less than 106, if we stay less than 106, I'm looking to be bearish and stay bearish on euro dollar. ECB is cutting rates, Fed is not. Maybe that makes this a little bit more attractive. This ranging a little bit longer is fine, but if we get back above 106, I want to see, even on this daily time frame, the daily candle would have to close above this 200 moving average. It hasn't done that since we turned the corner back in October, November of last year. So to me, this is a good spot. There could be some noise here with a little testing of those highs, but if we just come right back down to range levels, I mean, I don't mind that trade. So profit target 1, if you want to hold on for more, see if it breaks, go to parity. Profit target 2 would be parity, and then trailing stop losses down to like 96, which is where we were before this thing bottomed hard. Okay, but I think this looks fairly reasonable for a short on euro dollar. Pound dollar, I actually don't like the pound dollar that much. Pound dollar, if it turns, I would wait for a trend line break into this. We get a trend line break right there, then I would look to resume some selling pressure on pound US dollar with stop losses above a U-turn high. Watch out for a test or a fake out of that high, but I think there's going to be a pretty decent rejection area right off the daily 200 moving average or at the backside of this trend line. So somewhere in here, I'll look to see if this will kind of roll over, give us some confirmation, stop losses above, and then trade to either same lows or fresh lows. And again, look for your potential reward to risk. If you can get your reward to risk set up bigger in reward than risk, that looks like a pretty good trade. Okay, let's go oil. Oil still pretty choppy for right now. USO oil futures, I closed out my iron condor for a little winner. I'll take that trade. I'm not going to do anything else right now. I don't know if we're holding this floor. It seems like we are. I'm just not taking the chance on this thing potentially breaking. If anything, I would say with oil, if I can position for defined risk down here, this is probably what I'll wait on for oil. If we end up coming back down, maybe we don't do this at all. Maybe this is, breaking the high from this recent swing. Maybe this is a swing up, a basing, and then oil prices are going to start leaking a little bit higher. Maybe. Otherwise, if this is a floor that continues to be defended, then we come down into this level around like $66. I'll probably look at some defined risk trade on oil futures and just do like a bull call spread. I can buy a 66, I can sell a 67, maybe get like a 1.25 reward to risk or something going on this trade. That's what I was doing back here for a few months. Once we got back in the middle, so we had this big swing up and down, I did an iron condor where I sold, a bear call spread above and a bull put spread below. And I went from 20 cents, closed it out pretty quickly within about a week or two for 12 cents. So took a partial win there. But that's about it right now directionally on oil. I just think we're going to deal with a lot of indecision. Natural gas, on the other hand, I am long on natural gas, and I'm liking this trade. Hopefully we start making some fresh highs again and resuming the upside. XNG, this is natural gas index. I want to take a look here and see unleaded gas futures. Is there a feed for that? Let me go gas futures. So we got nat gas futures. Son of a bee. I'm just looking for like pay at the pump prices or just unleaded. I don't want Singapore unleaded gas. Nope. Fudge. All right, let me go AAA fuel prices. Average 316. Let's go back to the last. Let's see, we go a month ago, 312 up to 316, so we're higher. A year ago, slightly lower. But off the recent lows, we were down to like $3 national average. Now it's at 316. So I'm trying to find a chart for just the pay at the pump, because consumer-wise, inflation-wise, energy-wise, that's also a good sign of like sticky inflation.
Did you know we do a live trading show Monday through Friday with guests from all over the world? To get notified when we go live, click the bell button next to the subscribe button or check in at 9:30 a.m. Eastern Time. We have helpful, free content in the description below and on our website, a1trading.com. Thanks for watching today's video, and we'll see you tomorrow.